Hey guys, what's up? This is Stock Retail coming back to you in a funny way, pretty late, but I'll say Happy New Year. If you're wondering where I've been, boy, there's been a lot going on in my life, and a few folks have asked if you're on sort of Twitter slash X, you might have followed my saga, but for those of you just on YouTube or who hadn't heard, I'll just kind of quickly breeze by that, and then we'll kind of get to the meat of today's video. But just glad to be back. Let me say that clearly. Although again, I say often here on some of my videos, if you're wishing you could see me more, I am pretty regular still on Twitter slash X. Just easier to fire off a quick post than it is to sit down and make a video. But what's been going on for me and why have I been a little bit silent on YouTube? First off, we hit the holidays, and so I took a little bit of a break for family time. Just that was real nice. Had a real nice holiday season. Then here where I live, we got hit with an ice storm, and of all things, we got a little power surge because basically the ice builds up on kind of the power lines, and you get some problems here. And I had a fuse blow actually the same day on both our refrigerator and basically there's like a box on the outside of your house that brings the internet into your house. So the fuse blew on that. Literally yesterday, after 3 weeks without the internet at my house, we finally got it back. We were without our fridge for 2 weeks. More than you want to know, but thankfully we had a little mini fridge in the garage that we kind of kept a few things in. So we're fine, doing well. My mom also had ankle surgery. I've kind of been her caretaker. So there's just been a lot going on in my life, but nothing big, nothing bad. Stuff happens, right? Get through it. We all have things we deal with. Many of you probably have harder things the last month than I had. So I'm very happy. I'm here. I'm holding. Again, follow me on Twitter slash X if you want to see me more consistently. A little easier to just, fire off those posts than make a whole video. So, but here I am, and I, hate to inform you, Shorty, but I'm back. I got the internet back yesterday, and I'll be around again a little bit more. And obviously we're past the holidays and ice storms and all that stuff now. So what are we going to talk about today? Speaking of ice storms, just kind of playing around here, whose thesis is it that's getting put on ice? Is it Shorty's or AMC's? Because in that time since I've been here on YouTube, obviously it's been a little rough in terms of AMC's price action. Not been fun. And you could go all the way back quite a ways, right? It's been a tough cycle for us. And I have repeatedly said on this channel and on my videos, return to thesis, return to data, return to logic. And until the data and the thesis and the logic tell me otherwise, I still believe in this play. And so we're going to talk a little bit about that and what is going on with the price. You are being led to be scared about bankruptcy and some other things like that. And people asking me, can we still win and all that. So I'm going to go over some of that and tie it back to some things I said pre-holidays and then bring in some new information. So first of all, what's this thing about anemia, right? So if you saw Adam's post talking about the movie industry being a little anemic right now, and so I just want to draw out, I had made a video pre-holidays, all the way back, I think, beginning of November, so kind of right after the earnings call, talking about why the dilution would happen, why there was what I was calling a blip in the movie industry, and I'm going to show you that again today. And so just to bring you back to, a lot of people were pretty upset at the time about dilution, and I was a voice trying to say, hey, actually I think it makes sense to do it now. And I hope now in hindsight, you're starting to see the wisdom of some things that were happening. But let's review that again and make sure we're all kind of on the same page. So this was a slide I had in sort of a discussion I had, a video I had on the outlook for all of 2024, and then the outlook beyond. I went all the way through 25 and 26, which you can see a little bit of that here on 24, and then I had some other slides I'll show you. I kind of had gone beyond. And all in all, I'm still incredibly bullish, but I wanted you to know, I wanted to be real with you and show you. So if you look here, we have in kind of the end of last year, a lot of people are still wondering if we had a highly profitable quarter. I was not forecasting that back then. And I was already looking at Taylor and Beyonce and all those kinds of things and giving you a little bit of a different view. I would need to go refresh this. Don't take these numbers as my current forecast. These are as of November when I was talking to you. But I was saying, hey, Q4, we were going to see a dip, and Q1, we were going to see an even deeper dip, and then we would start to climb back out of that, and that even by the end of the year, start to flip back to being profitable again. And the point is then, Adam's always used this language of survive then thrive. Well, you've got to have enough cash to survive, and so I was making the case the dilution made a lot of sense to me. And what I was kind of telling you then, and I'll refresh you now, is originally my forecasts, actually these were actuals here. This green arrow I've just brought in, we were on a really great trajectory, right? And even I'll remind us, we'll have this asterisk here in a minute, that those two quarters, those two profitable quarters there at the top, both happened on far less movies than we had in 2019. And both happened before we expanded popcorn to Amazon and Publix and Kroger. And so, what is our future? Oh, and both happened before candy as well, and before distribution. So there's a whole lot to be bullish about. The real question that Shorty wants you concerned with is, can we get to the place where that bullishness actually bears fruit? And that's what I want to really kind of focus in on today. And so I had said, and this is not even a refresh slide. Like I said, this slide is from November. I'm just showing you again for those maybe who missed it, or if you want a little refresh here, we were going to have this blip, this trough, this cup, whatever you want to call it, I was calling the strike impact. And I walked you through, so go find that video if you want sort of to back that argument up. But I showed you literally the titles, the movies that had moved out of 2024, that were supposed to be in 2024, that had moved out. And recall, too, that in that earnings call, Adam said, hey, we need this strike ended. And within 4 hours, it was ended. So that was fantastic. And so the bullishness, though, we're still on this trajectory overall. It's moved over to the right because of the blip. The blip, in my opinion, though, and this is the big takeaway, I was trying to warn you what we were going to live through for a little while. And by the way, I caught a lot of flack for that, and I'm going to talk about that a little today too. But I was trying to give you the sort of outlook because it's sort of like plan for the worst, hope for the best. If you already know you can get through a worst case scenario, then there's nothing to fear. You're fine. And that's what I'm kind of showing you. Like, there was this strike blip. It was known. I showed you it was coming. So by the time Adam talks about it being anemic, it should not have been a surprise. You should have known it was going to be anemic. But I'm going to get back to also some positives that came out of that from him. We're still up and to the right. Okay. So there was kind of another couple of views. I showed you the yearly box office, and I was kind of giving you that strike impact. I was saying 2024 was going to be below 2023 in terms of the box office. But great news that our earnings are not all that impacted. Our 2024 earnings, and forgive me for flying by. Again, you can go find that other video before the holidays where I go through this in much more detail. Look for one that's just about kind of the longer term outlook, kind of 2024 and beyond. That we would actually still, year on year, 2024 would be better than 2023 in terms of the overall bottom line. And that's driven by the work that Adam has done to reduce our debt, so that's less expenses going out the door. Reductions in depreciation and amortization, that's kind of just getting a little bit deep on finances. And then the diversification of our revenues, expanding popcorn, adding distribution, adding candy. There's a lot of that didn't exist in 2023. Popcorn didn't even come in until I think it was maybe May. You guys can remember and correct me if I'm wrong there. But so we didn't have popcorn the full year. We certainly didn't have it in all doors the full year. We didn't have candy. We didn't have distribution. So there's a lot to look forward to in 2024 in terms of us continuing to improve. But there was going to be this blip. Okay, so to me, it's not a surprise and it's not concerning because Adam built up our cash. Just kind of an outlook on our yearly revenue. So that's where I'm saying you can see from 2023 to 2024, we basically stay flat in terms of AMC's revenue. And that's just, again, offset by what Adam's done with distribution, candy, and popcorn. Otherwise, we would be down because the box office is down. So he has started to soften the blow of the ups and downs of the box office. But the real bullish thing you got to hear in the middle of all that is what happens when movies return. Now, remember, I reminded you Q2 and Q3, we were basically better than 2019 on half the movies. So when the movies come back and we've bolstered ourselves with all these other lines of revenue, we're going to fly. And that's what you see here in my 2025 and 2026 outlooks. And remember, those were based, 2026 is a little bit of guesswork on what movies there'll be. But 2025, there's a lot of movies that are already known that'll be there. So there was a little bit of an informed forecast there. It's not just kind of made up. What I want to just switch topics for real quick. Actually, so let me go back. Let me just remind ourselves, because the blip was known, I believe it was wise that Adam diluted when he did. He reduced our debt, he pocketed the cash. We're gonna talk about that by the end of this, and he set us up to get through the blip and have no bankruptcy. But you're being told lately, in particular, I've seen this on Twitter quite a bit, that you needed to be concerned about bankruptcy. And there were some who frankly even claimed to be apes. One I saw today who even claims to, I don't know, just used a lot of faith-based language and trying to sound real sympathetic, but I believe they've been spreading a lot of lies. So interesting that they're using faith-based language while they're spreading lies. That, I don't know, just be careful about some of that stuff. But there are a lot of people out there trying to trick you. So I've seen some people talk about, well, the stock will go so low and then you'll go bankrupt. And I want to just talk through the differences between stock price and something called solvency. Solvency is your ability to pay your debt. So stock price, that's just the current market trading price, of a share of a company's publicly traded equity. You know that, right? You look every day and you see what's our stock price, and that's been a little tough. But that's the asterisk, right? That's driven by more than simple supply and demand. We've got algorithms, high frequency trading, short ladder attacks, spoofing, and before I get gaslit, these are all things that some major companies have admitted to in court, okay, and paid all kinds of fines on. So these are things that are absolutely happening. We've got derivatives, swaps, cross asset trading. I've talked about the tokens. So there's a whole lot in the stock price that isn't necessarily telling us just supply and demand. And I just continue to ground myself in that. Meanwhile, the market cap, that's the total value of a company based on all the shares outstanding at the current stock price. And again, remember, that can be manipulated. Now, I have not talked yet anything about being able to pay your bills, right? So what we need to really hone in on is what's solvency? What is basically the ability to not go bankrupt? When you're insolvent, you go bankrupt, and you either file Chapter 11 or Chapter 7. Chapter 11 you come out of, but shareholders, are hurt. In Chapter 7, often you just don't even come out of. Maybe someone buys your brand name or something. And I'm just, frankly, side note, very proud of this executive team, and Adam in particular, for having now fought for 4 years to not go bankrupt. He has said they'll go bankrupt over, I don't even want to say it, but he will not be going bankrupt while he's at the helm, right? So, and he has so far been a man of his word. And if someone can keep their word for 4 straight years and set us up for success, then that's someone I'm willing to listen to and continue to listen to. And I will continue to say that no matter how many people try to attack me with all kinds of gross memes that I have to delete on my feed. I support him and I support his team because they have steered us through very, very rough seas and we have not gone under. But let's focus in on solvency. So these are my words. Solvency is the ability of a company to service debt and pay its current bills. So you've got things like, can you even pay your workers' paychecks? Can you pay your, gas, electric, and water bills? Can you keep up on your accounts payable? Like when they get the candy, when they get the popcorn, they need to pay whoever made that, the manufacturer, right? You've got to pay for computers. You've got to pay, just any number of things. Any supplies you have, you've got bills, right? So if you cannot pay your bills, you are insolvent. And that is why he has been very focused on the amount of cash they have. If you go back and read an interview he had in 2021, he talked about his time, I'm forgetting, was it Carnival Cruise? Whichever cruise line he was at. I mentioned how busy and multitasking I've been, so my brain is a little bit all over the place. Anyway, whichever cruise line he was at, that he was watching their cash amounts daily, right? And so, sorry, someone came in the room real quick. He knows how to keep a focus on the amount of cash we need to stay solvent. And so that has nothing to do with the stock price. Your stock price, now, if you needed to feed your business with dilution, if you were actually paying your bills with dilution, then you could go bankrupt if your stock price wasn't holding up. Because I've talked a lot on my feed about access to capital, right? If you needed to sell shares to pay bills, that would also just be a real problem anyway in terms of your business model. Which, by the way, there's another stock a lot of people have pushed on you, which I stayed away from because in my analysis, I realized they were paying bills with their shares. So always, do your due diligence, be careful. But AMC is not doing that. Now, AMC has been paying down debt in some cases using shares, but note too that those were sold at a premium. The bondholders were basically buying shares above market value to give to write off some of our debt. So we are very solvent. Think through like when we had the dilution, we came out with around $1 billion of cash. In fact, let's talk about that. So how about AMC's solvency? In the middle of Q4, there was a moment where we had around $1 billion of cash. Now, I just say the middle of Q4 because we need an update from Adam. So when we have the next earnings call, we will hear what did we land with in terms of cash. And then, of course, where are we now? But let's just call it we have around $1 billion of cash. We reduced our debt by about $173 million since Q3. So that means there is a little over 4 million, like 4.3 million reduced cash outflow every quarter. So when you're paying debt, that's an actual cash expense. I've talked to you before about some expenses are cash expenses, some are really just on paper. And so those on paper expenses like depreciation and amortization, they don't hit your cash, which means, you don't go bankrupt on those kind of expenses. But when you have actual cash going out the door, you have to manage that. Well, so we've paid down $173 million of debt since the last quarter. So every quarter now, that's 4 million plus that is not going out the door. So we have this $1 billion war chest. We have this 4 million that's not going out the door every quarter. So we've improved by that. The strike blip will end. I believe about the end of this year, kind of Q4 of this year, we start to really turn around. And boy, 2025, we start really flying. That's a forecast, and I always tell you guys to be thoughtful about that. Meanwhile, we've also added distribution, we've added popcorn expansion, and we've added candy to sort of soften the blip. So what you should be hearing from me, now remember, if you're newer to this channel, I'll just share with you, I have a lot of skill in forecasting. I've gotten a lot of forecasts right for AMC, very, very right, and I've been beating Wall Street quarter after quarter after quarter. In terms of my forecast. So I can say to you with some level of confidence in my forecast and my abilities, it doesn't mean I'm right, but I have, confidence anyway, in my past track record that I am not concerned about AMC's cash position and AMC's ability to pay the bills, to hold out until we hit significant profits. Now, Shorty will counter that and say, well, you got all that debt due in 2026. So I can just hold till 26 and then you got a problem. No way in heck. First of all, the Fed has signaled rates will be going down, right? So what do you think happens as Adam shows banks our balance sheet is a little cleaner because he's been paying down that debt. Our cash flows have been improving. The movies are coming back. He's implemented all these businesses. Hey, can I please refinance and push that debt out and probably even at a better rate? Yes, that's going to happen. We are going to be able to refinance. Granted, that's opinion, but boy, I've said it before and been right before, and I just can't see a scenario where we're not able to do that. So I have zero concern about that debt due in 26, though Shorty would like to scare you about that. So bottom line, in my opinion, I'll say that clearly, it's opinion, but it's an informed opinion and one that has been right an awful lot in this journey. AMC is clear of any real risk. I just don't see any real risk of bankruptcy, though Shorty would like you to believe that. But again, think about the message you're given when someone is trying to pin bankruptcy to a stock price. That right off the bat, it's not even credible. Okay, so you got to think about the fact that you're just kind of getting scaremonger tactics against you. Let me say it another way. If this was like a bell curve, and you think about like, I don't know if you've ever seen a bell curve, but it's this idea of like on the far left is, let's say he's like, in this case, a real heavy risk. And on the far right is like no risk. Bell curves just kind of plot sort of, let's say from 0 to 100 or those kinds of things. And you get into sort of, man, I'm Sorry, I was about to geek out on some of my statistics classes. Let me not do that. If this was a bell curve, though, I'd say like AMC is like 2 sigma. It's like sigma is a standard deviation. So if you're like 2 standard deviations above the mean, it's called, like away from the average, basically better than or ahead of. AMC is like 2 sigma ahead of the game, and Shorty is at the point of no return. Translation, we're doing fine. We're doing great. Reminders. A lot of stuff I'm seeing out there that I just want to kind of underline. This has been, while I've sort of not had the internet, I still have cell service, and I've been kind of trying to track what I can. Although that's been an issue too, because I have like 2 bars in my neighborhood. So it's been a little bit hard to have access to all the information the last few weeks, but you manage, you make do. Um, so I just want to remind you of a few things. First of all, I've said so many times here, look for voices that are both credible and have integrity. I'm seeing a lot of voices pushed on you that either lack credibility, like they'll act like they're some business professional and then they'll say stuff that tells me they don't have a clue about how business or a balance sheet or an income statement actually work. So that's a lack of credibility. Then, you could be credible, you could know what you're talking about, but lack integrity. I see some smart accounts who are sort of intentionally misleading sometimes or causing confusion. Somebody shared this week a topic about bankruptcy that was really an article from 2021, but they didn't happen to say anything about this concept being from 2021 and kind of made a lot of spin on, uh-oh, is this happening now, and that kind of stuff. And then you dig in and you find out, well, they know what they're talking about, but they're kind of causing FUD, right? Fear, uncertainty, and doubt. They're sort of putting fog in the air. The other thing is just, I'd say there's nothing like the real thing. Um, you know, if someone is kind of showing that they are faking, and it's kind of tied even to the next line. So if a teacher doesn't know a subject, it's time for them to be schooled. There are people who are pretending they're apes. That's one kind of fake. Then there are people who are pretending they know things that they don't really know because they want to set themselves up as a professional that you should listen to and then move you all over the place. That's called influence, right? There's a reason it's called an influencer. I would just suggest really, really, really strongly, don't look for influencers. Look for the informed. Look for people who know what they're talking about and do it with integrity. And I'll say, some of the so-called leaders of this community tried very hard, or let's say big accounts, to discredit me when I talked about this blip in the movie industry. And fast forward, and now Adam's talking about it, right? I told you months ahead of time that this was coming. Large accounts tried to discredit me and attack me over it, and I called some of them out. And now what I said is correct. So, consider who has the credibility here and who you ought to be listening to. And, I will say, too, I have a track record of calling some folks out over the years, but some of those were really, really nasty, and I'm glad that I did. Speaking of which, I would be real careful about so-called decoders. Some of those that I've seen have an agenda. Some don't. Heck, I try to decode sometimes, and everybody does. We all want to know what's really being said. But again, bring it back to something simple. Does this business have the ability to survive and then thrive? To me, it's clear. It's in the numbers. Numbers tell a story. I've told you that before. And I do believe there are some decoders, some that, may even seem like they're positive, who have an agenda and are not working for the apes. I really believe that. And I've seen some things. I'm not going to stir up too much right now and give you all the sort of, examples, but just if I could just encourage you to continue to be careful about who is trying to plant different ideas in your head and where they would like to move you emotionally, mentally, and ultimately financially. And then finally, this one's probably more obvious, but I've been pretty loud about it on Twitter. I don't mind just saying it out loud. Not all charities are on the up and up. I will tell you, there are ways to hide transactions under a charity front and to effectively buy off apes and get them speaking from a script. I'll leave that one at that. But good news, and yes, opinion disclaimer, but all roads, in my opinion, lead to victory. What do I mean by that? So people kind of ask, well, can we even still win? I believe AMC will squeeze, and I believe that will happen any one or even all of four ways. So you got the algos. At some point, the algos are going to do a number on Shorty. I honestly believe that. Now, some are controlled by Shorty, right? So that's an issue. But at some point, algos run on time. And that you remember Adam's post, time matches on. I'm not going to explain that a lot right now, but I believe there's a chance at some point algos just take over and we run. If that doesn't happen, I believe, and I've shared a little bit of breadcrumbs on the thesis. A lot of people have asked me to share more. I will one day. That sort of tokens and the relationship with Bitcoin and some other crypto that may yield something I've been calling on Twitter the great unwinding. If that happens, we will fly. And I mean, we will fly like historic flying. Global macros. I'm just talking here about the macroeconomy. Things like all that you see happening in China, things that you see in our economy, rumblings with banks and real estate, and a lot of things. Look at my highlighted posts. I've highlighted, I think, like 4 posts to kind of tell you my point of view on the fact that I believe we're in a bubble right now. At some point that turns around and that impacts people's margin, and we may fly on that. And then finally, long range, I just think our victory is assured because, as I've said, 25, 26, and beyond, we just have significant profits and there'll be no looking back. So bottom line, I believe in the long-term outlook. Sorry, guys. Things should go very well. And wow, that's a lot of V's. Sorry, something must have happened typing there. Things should go very well. And we will win. So let's go.